Good evening. Epstein with your metal market wrap-up, and this wrap-up is for Monday, the 23rd of February, 2023, 5:20 p.m. Central Time. And I want to remind you, we're going to have the live webinar this coming Thursday. I'm going to open it up at 12:15. I begin promptly at 12:30 p.m. Central Time. Should be a lot of fun. At any point, you can just click up here. There'll be a cursor and take advantage. Just click that, and that's where you sign in if you didn't get my email mailings. All right. So in the market today, as the market fell today into the 1916 area, got to 19, I think 12 and something, I was telling clients that was the support zone. You had the same thing happening, by the way, in ETFs. And as it turns out, the market has popped from there. One day doesn't prove anything, but so far that has held up pretty darn well. Energy markets, you seem to be stuck in the Brent crude, in the 88 area, just over 81.5 or so in the crude here. You're getting a bounce in the nat gas. We have a cold spell coming in. That could give you a kicker. Bonds and notes are going to be all over the board as traders now try to figure out which is the best way for them to position themselves for next week's. And that's going to be on February 1st, the FOMC meeting. And that'll be where we get some big data. What's the Fed doing? Where are they going? And, the interesting part is we expect the Fed to go anywhere from one more rate hike to 3. Total of whatever they do, about 75 basis points, is the consensus. That doesn't mean it can't be 1 point or more, or it can be a half a point altogether. Things will change with the fundamentals, but that's the consensus. At the same time, they're expecting in the euro for them to go up about 1.5 points. And part of what's moving these markets is the differences that you're going to get in yields as they move central banks one way or the other. The same in the UK. They're expected to be strong too. But in the gold market, as I said, this is the next zone to challenge. I was making that clear over the weekend updates and the like, and I think I did the job for you. As you can see on a daily chart, we keep moving higher. The market has a pattern of consistent higher lows, higher highs so far. If we can clear the highs of today, that would move this line back under that low. We haven't done that yet. On the reopen, we haven't taken out Monday's highs. When we look at moving averages, the 18 is over the 200 and the 200's over the 1. A true bull market, this 100 will eventually get over the 200 and the 18 stays over. Then you have the shortest term over the medium term over the longer term, and it's a classic bull. Where's the resistance in this market so there are no moving averages above it? And it's the upper Bollinger Band if you can get there. There's another number called a window envelope, and I put them on my subscriber videos. I don't put them here. I don't put the rest of the moving averages I follow either. It'd be too many lines for you. But that would be the resistance zone at this point. And each break, as long as you stay embedded, is being bought by the pros looking for another challenge, ideally of the Bollinger Band, but often it's the window envelope if they're right on top of each other, one right under the other, and the window envelope to be closer right now. I then look at the gold-silver ratio, and silver's taken a beating compared to the gold market. And you see what it did today. But what did I tell you this type of chart action is going to do? I think I was crystal clear. Once you establish this sideways action, you get whipsaws with little follow-through. So today, as the market got under 2,300, some people were probably either getting stopped out, selling the market short, whatever. Now you're back to 2,357 and they're going, what happened? They don't have the knowledge you do by watching here and taking the enhanced Bollinger Band course, learning what that can do. We then look at copper. As long as you keep the embedded reading, I'm still looking for higher prices. Now, the headwind comes in copper that this is the lunar holiday. And as the lunar holiday goes on for this week at least, you don't get an awful lot of export-import activity out of China. The trade desks go emptier. That's the right word. And then they'll pick up next week before the holiday ends. The holiday ends February 5th. Traders generally show back at their discs. This is what I've been watching year in and year out. I wouldn't expect it to be any different right now. Still in an uptrend. Then in platinum, if the market can clear right here, 1060.40, and it hit 1062.30 literally just now, you come out of the downtrend. So these arrows that I have drawn, it's just happened. Now they'd be higher lows, higher highs, but you're still under the 18-day average of closes, the red line. So the bias is down, but the trend is up. It's right now a bear market rally. Why? Because you're under the 18-day average. The bias determines if I call it a bull market or a bear market. Then the trends kick in and everything filters off each other. Momentum-wise, the market is no longer pointing to an oversold condition, so it's just trying to figure out what next. In the palladium market, lower highs, lower lows. Now back here, you hit the lower band. That's where I think the pros came out. And now I think the market, while it's in a downtrend, the fact that you have a reading already under 30 means you're oversold. Any reading over 30 is oversold on the downside. Any reading over 70 on the upside is overbought. And in the dollar index, I'm just bearish as can be. You still have one of these patterns of lower highs, lower lows. Now, admittedly, I don't know what I want to do going into the FOMC meeting, but that's not now. That's next week. All right. So right now, still the bear patterns, and I think the market gets sold. Yes, at any point, you got to be aware you could get some unwinding of the bearishness going into that report. So you trade it a little bit lighter. You put it all together, you try to come up with a package that makes sense, and we'll get to talk about all this in great detail on Thursday. Now remember, my webinars are free to you. They fill up. And when they fill up, there's no getting a seat in them. That's just the way that it typically works. How do you get in? You just move on the top here, the cursor, if you haven't received an email or a link from us in any manner to sign up. You can also call my brokers. They can work with you, 866-973-2077. If you have SPDR ETF questions, I ask one thing. You send them to me ahead of time. How? After you've signed up, you're going to get a user ID and password to get into the Zoom meeting. It's a password that you're going to need, actually. When you get that, in that form that you're going to get from us, it'll say, click here if you have any questions. And what it does is when you're online, it opens up a form. You type it in, the question comes right to me. For those of you that have written to me already, I have done all the charts on every one of them that I have. So answered all those. Other questions will come during the 20-minute period for the live webinar. I'll do my best to answer them. Again, click here if you'd like to join. I look forward to seeing you this coming Thursday. I'll open at 12:15. We record 12:30 p.m. Central Time.